Want to trade better? We got to get back to the basics. Today we're going to be going over basic candle structures to help you in your trading. Anyway, let's go back to what we're going to do today. We're going to be looking at candles here. Let me see if I can make this a little bigger here. Okay, if you keep your eye on this one right here, this big green candle, you see this large wick that it had. Let me get this out of here. That's a lot better. So this green candle right here, okay, this shows that there was a lot of buying. A green candle's for buying, red is for selling. That's what you see here. But the characteristics of a green candle is the open is right here. You see the bottom of the body, and then you see a shadow down to the bottom. So it opens here, it bottoms out here, it rises all the way up here, and then it starts to sell off towards the end of that time frame, and then it closes here. So it opens here, it does what it does, and then it closes here. That is a green candle. That is a bullish candle. Look at a bearish candle. Here, it's the opposite. It goes backwards, okay? So instead of like the green candle starting here, going down, up, and then closing here, it's the opposite. It opens here, it goes up, and then here's the sell-off. Boom. And then there's some buying back, pressure back in, the bull's pushing it back up, creating this long shadow. Okay? You get that? Open here, goes up, hits the bottoms out, closes here. The opposite was our green candle, where it starts here, goes down, up, back. Okay? That's candle basics. That's as basic as it gets. On the daily chart right now, and each one of these candles represents 24 hours of trading. And with Bitcoin or cryptos, it never stops, so it's 24 hours. On the market, with stocks and stuff, I'm on the West Coast, so it opens up at 6:30 and it goes till 1 o'clock our time. So it's doing the transformation right now. It's 9:30 in the morning and it shuts down, I think, at 4, something like that, East Coast. So even though it's one trading day, we go down to the hour. Each one of these candles signifies an hour of trading. Okay? And we can see right now we're in a little bit of a sell-off here. People hit their profits here and on Bitcoin, and now we got some profit takers, which is fine. There's no reason why you can't make money doing this. Again, let's look at the monthly. That's what we always do. And again, each one of these candles is a month. We saw when it peaked out here at what was that, 42,000. Okay, what does a green candle do? Starts here at the bottom, goes down, shoots up, then comes back down. Okay, so we had towards the end of the month, what we're going to see if we go to the weekly, we saw a lot of sell-off, a lot of profit taking. So let's go to the week here and see how that week looked 2 months ago. Okay, so that was February. So what do we see here? Here's the sell-off, okay, before the next month begins and goes up. But the sell-off was this range right in here. So again, it's always good to look at the big picture of what's happening as far as the overall movement, the overall trend. You can really see it on the bigger time frames, the weekly, the monthly, the daily. Of course, if you want to trade on shorter time frames and other stocks, everything's the same. But if you look at the longer time frames, you can really see what's happening. You can see momentum, the way it's moving, and you can guide yourself and trade more with more success by knowing the general trend. Like if this is a daily and I'm seeing that this is creating higher highs and higher lows, I know it's in an uptrend. So why am I going to go here after this candle? Well, I saw a little sell-off at the end and then jump in and then short the thing and to sell it going short, which is going south. and for the price to go down. Why would I want to do that? The overall trend's going up. Well, we did have a red candle here this day, but it didn't break below, and that's another thing we need to look at. Okay, when we're looking at these candles, okay, we see this shoot up and we see a drastic sell-off here at the end, right? Does it mean that everyone's selling and everything? No, not necessarily. Confirmation is on the next candle. So when we see this candle here, what do we see? Started here, bottomed out there, shot back up, and then closed here. So when you see it almost like a cross, it's called a doji. And what this signifies is indecision. People they're not buying, they're not selling, or if they are, they're doing it quick, they're in and they're out. It's a rule of thumb is if you see an inside day, because this is an inside candle, it could be on any time frame, stay away. Don't trade, because this large candle here, the next day's trading did not surpass it up, or it didn't surpass it going down. So the bulls didn't have enough to push it up, the bears didn't have enough to push it down. So the next day comes. What do we see here? It starts, there's a little nudge up, and then the bottom falls out, and then at the tail end of the day, the bulls pushed it back up. But it still broke below this cross here, this doji, this previous day's candle. So it broke below it. What does that signify? That this candle, this day, was actually under here. Even though it broke down here and went back up, we still consider this a down day. It's down because it didn't go across the top. It didn't surpass the previous day's highs. So we look at the next day, and what do we see here? We started here because that's where it closed. Starts here, bottoms out, shoots up, and then back down again. So what do we see here? Is this a down day? No, it's a green day because it did break the previous day's highs. And then what do we see the next possible day? The next day, a little dip down, very small dip down, then shoot up, then back down. So we're starting to see a pattern here. And what we see here is a good reversal signal to kind of just get your mind conditioned to see these things, to see reversals. Okay, again, we're on the daily. We knew that Bitcoin was on this downtrend for a while, and then what we saw here was a low, but not an ultimate low, but it's a red candle. It dipped down, but it went back up. And then when we see the next one surpassing, beating the previous day's high and turning green, or it works the other way as well, this could be the beginning of a reversal. So you need the next day's confirmation or the next hour, whatever time frame you're trading on, for confirmation. And once you get the confirmation, you can go in. So what you want to do is, okay, once you get, it starts here, goes down, you don't go in yet, and then once it surpasses the previous day's high and it's going, you can get in. So if you get in here, for example, or here, and it closed below where you got in, don't panic. Watch the next day. Okay, it goes down, but it didn't beat this. So what you want to do is always, this will be your stop. Your previous day's low is your stop. Did it go down there? No, it didn't. Okay, so you're still in it. Next one, same thing. You just watch it, and if you don't have the emotions or the guts to ride this thing out, then of course you're going to get out and take your loss. But nothing is guaranteed. Nothing is guaranteed 100%. So it does take a lot of emotion and a lot of just managing those emotions to stay in a trade, because you know overall, where's this thing going? You know it's going up. You're in an uptrend now. There was a reversal here. So you have one day of sell-off. So go back. What day was that? The 31st is the last day of the month, the previous month. Let's go to the month. And what did we see? What did we see? Okay, we know it started here, goes down, up, back, and then what? Possibly going back up, because this is the next month. This is where it started the next day. You're still in an uptrend. Do you see this? You're still in an uptrend. This is not a reversal, so you stay in the trade. You stay in the trade because the momentum is still going up. You see this? You're still going up. This was not a reversal month where it went down and broke below the previous month, you're still on an uptrend. So confirmation is looking back at the longer time frames to see where you're at, to stay in the trade so you don't get out and panic out and sell out. And then you sell here. You bought, let's say you bought here at 35,000. Okay, let's just say 35K you bought. Well, it went down. Guess what? You had this red day. Do you panic and sell? Okay, you sold. You sold for a $2,000 loss here. Okay, now what? It takes off. Now where you're at? Now where are you? 39,000 up to 41,000. Now you're sitting there wondering what happened because you didn't look at the longer time frames to see what's really happening. That's why it's so important. You can't go on the 1 minute chart and trade successfully without knowing what's going on, what's really happening. Okay, we're on the 1 minute right now. Probably can't see much because it's so small. But you can't, does this green candle show us a reversal? Could be. But we looked at the next one and what happened? Nothing. Okay, well, it's in a downtrend. We got to sell. We got to sell because look at all this. This is all downtrend. Well, take it back out. Look at the 5 minute. Are you into the downtrend? Looks like it, but it looks like a possible reversal. Okay, go to the 30. Where are we at? Ooh, look at that big red candle. Ugh, yeah, we're in a reversal, man. We're getting killed here. We got to get out of here, right? Go to the hour. Oh, another red one. Oh, not good. Not good at all. Look at the daily. Okay. Where are we at with the daily? Still up. We're still on an uptrend. This is not a reversal signal. It is not a reverse signal until you surpass below this candle here. Then you're done. Then you know there's a possibility of a reversal going the other way. But what we see here, as we're getting close to the end of the day and the formation of a new candle in about 39 minutes, we see we're still in an uptrend. So if you're trading on the 3, the 5, the 1, the 15, even the 30 minute, before you take your trade, look at what's really going on so you don't get caught either holding a bag or selling out too early and wondering what happened. There's three types of people in the world. Real simple. Those who make things happen, those who watch what happens, and those who wonder what happened. 3 types of people in the world, 3 types of traders. Likewise, same thing. Either you make it happen, or you watch it happening, or you wonder what happened. And 90% of the traders out there are those who wonder what happened because they don't know what's going on. They don't see the big picture. Look at the big picture and see what's really happening. Is this thing going up or is it going down? Where are we heading? Then make your trade. If you're going to get in and out of a trade in like 5 minutes, then you can go and look at the 1 minute, the 3 minute, and the 5 minute or whatever. But it still affects what's really happening here. What are we looking at here? So again, look at time frame continuity. Is this up on the month, the week, the daily? Well, if they're all 3 checked and they're going the same direction, your chances are your day trading is going to go in that direction as well, unless there's something drastically, fundamentally happening where news came out or whatever. But again, that's part of trading. You got to keep your ear on the ground of what's happening, and you've got to know the technicals. So I hope that this is a basic, very, very basic lesson on candles today, and hope it works out and I hope it helps out. So if you can't, just like the video and make some comments. Let me know what you're thinking. Got any questions? I'd love to answer them. And that's it. So again, overall, looking at Bitcoin, no problem. Don't worry about it. Are we going to dip down? Probably. We're going to have a sell-off on Sunday? Possibly. But we're not in a reversal. We're still in an uptrend. So just wait and buy in the dip and get some more and keep growing. All right? Have a great day out there, guys.